Hello, everybody. Welcome to the Thursday live stream. So a lot of things to go over, so let's just jump right in. First of all, I want to remind everybody that today we did the NFA live show. It was a great lineup as usual. Ben, it was hosted over on his channel, and we had Jessica from Coin Bureau. And I got to tell you, towards the end, when we start talking about the altcoins, then Ben gets super excited. I'm just kidding, he didn't get that excited. But some of Jessica's picks for altcoins were pretty eye-opening. So I linked that in the description. You can check that out. And we go over a lot of things, and it's I dare to say quite a bullish video. So you can check that out at your leisure. But today what we're here for is this, which is just crazy. It's just craziness because I didn't think this would happen. I didn't know how this came about. And I'm kind of flabbergasted right now. As you can tell, I'm trying to find the words. But this is from Bitcoin Magazine. Elizabeth Warren, one of the staunchest detractors of crypto, who just recently came out for her campaign to say that she's having an anti-crypto army, comes out and signs a certificate to honor, this doesn't make any sense, to honor Bitcoin creator Satoshi Nakamoto with a ceremonial flag flying. Americans are forever grateful. And this was broken by Bitcoin. And at first I was thinking to myself, it's not the 1st of April. This is real, right? And it just, but apparently it is. And this was a piece that was put out by Bitcoin Magazine. I'll read it, but I'm going to start from the end of the article and move upward. I'll tell you why in a second, because one of their points that they made is that, and I've said this before, and we talked about the Bitcoin ETF being approved and, you know, how big it actually is. It doesn't really matter, inflows and outflows, even though we've got 7 to 14x demand, coming in from the spot ETF, as opposed to the actual amount that's actually being produced every day, which is 900 Bitcoin per day. I said it didn't matter. I still don't think it matters to a massive extent. It was the narrative. The narrative is that traditional finance is here and actually says that, you know what, this is its own asset class. So take that as you will. But this is what the article states. Now that U.S. regulatory agencies such as the SEC have allowed the approval of 11 spot Bitcoin ETFs, including Fidelity, FBTC, and of course iShares, which would be BlackRock, Warren has changed her tone, recognizing the immense economic freedom brought about by such a novel technology, and now joins a growing group of elected officials throwing their name behind Nakamoto's protocol. I read this and I'm like, I mean, it makes sense. I mean, I think where we're coming from here, but again, it's just from someone who was, so anti-Bitcoin and, talks about how, of course, it is used for massive illicit activity. I just found it very interesting of the pivot already. So let's just break into the article and we'll kind of break this down from there. So starting at the beginning. Now this is, of course, turn of events. Elizabeth Warren, longtime adversary, says, yes, we're going to celebrate 15 years since the network launched. And here's the official document. In honor of Satoshi Nakamoto for the 50th anniversary of Bitcoin, the first truly inclusive financial system that is providing new economic freedoms to populations previously ignored by both public and private institutions, Americans are forever grateful. Signed by Elizabeth Warren. Crazy. So this is in participation of the Capital Flag Program. Senator Warren's office submitted a request to commemorate Nakamoto's accomplishment of creating the first truly inclusive financial system with the colors of the U.S. flag being floated above the Capitol. Her career-long rhetoric about fighting for the financially underserved has finally taken shape with this tangible statement. And I remember, listening to Elizabeth Warren, that was what she ran on, essentially, was going against the bankers. I just found it very odd that she would side against Bitcoin, and all of a sudden Jamie Dimon was like her best friend. It was just like a crazy day. Tomas Pacchia nailed it. Co-founder of PubKey said this is a historic moment for how politicians in Washington view the promise and inclusivity of the Bitcoin protocol. What politicians do is much more important than what they say. I suppose so. Only 1 week before Warren ordered the flag down, the flag flown. Remember this. She introduced legislation to give the Treasury more tools to restrict the criminal usage of Bitcoin, making bold comments that they need new laws to crack down on crypto's use and enabling terrorist groups, rogue nations, drug lords, ransomware gangs and fraudsters to launder billions in stolen funds, evade sanctions, fund illegal weapons, and profit from devastating cyber attacks, creating an anti-crypto army in March of last year for her bid for re-election. So again, it is kind of odd to say this 2 weeks ago, then to totally pivot and go, we should celebrate this technology. It makes no sense. Anyhow, let me know what you think about that in the comments section, because I'm befuddled about what's happening in the background. I don't get it unless someone's got some great information. Anyhow, on that note, I always like to share these little discrepancies, or when people bring up points against Bitcoin, because it's the things that we all need to talk about. Because as we move into mass adoption, people are going to have questions for you. Look, if you haven't gotten the text messages or the talks from people who you would never have thought are getting into crypto or Bitcoin, essentially, you're going to start hearing more about that as we accelerate towards the Bitcoin halving. And one of those things they're going to say is, and of course, there's many things they're going to say, do we really need this? Is this something that's actually legit? Senator Elizabeth Warren is crazy because she said two different things. But one of those, this was from Peter Zeihan. And we've played this clip over and over again. And the reason why I like to do this is because, when you get these objections, I think it's important that you know the answer to them so you can kind of, go from there. And one of these objections that Peter talked about is, of course, he was on Joe Rogan, and this was back in, I think, November, December, because he was talking about how Bitcoin's price was 16,000. And he said it was going to below 17,000, or excuse me, it was 16,000, and it's going to zero, which means it has 17,000 more to go. So I don't know what he was talking about as far as math goes, but you can listen to the clip. I linked in the description. But one of the things he talked about, he goes, there's no way that we can lubricate the economy with only 21 million, because there's only 21 million Bitcoin in existence. There's way more people in the world. How does that even work? That doesn't make any sense. And of course, it's people that are getting into the evangelicals, and it's just a dangerous situation. I thought about that a lot, and it's something that I have massively dropped the ball on. And one of those things that I dropped the ball on is, and I think it's something we should all do, is remind people that, yes, even though it's 21 million, you have to remember that for every Bitcoin, there's 100 million Satoshis within that. And to make that super simple, people complicate this. I don't understand why. But I said, look, just remind that this, $1 is 100 pennies. If my math is correct, correct me in the comments section. And one Bitcoin is 100 million Satoshis. That's pretty much what it's like. And if you take 21 million Bitcoin times 100 million sats, you get 2.1 quadrillion sats. That's a real word. I didn't really realize that was a real word until we were taking a look at derivatives and how much is actually out there. It's over one quadrillion dollars worth. So when we talk about, people say, well, there's not enough for the people out there. There's only 21 million. And then, there's actually people have actually lost Bitcoin and these boating accidents. And of course, they've lost their passphrases. Just remind them, just go, we've already mined 19.5 million. We're going to get 21 million at some point, maybe 2140. But for the total amount, it's 2.1 quadrillion sats. There's plenty of that in the world. So just a little something to throw out to people, so you can also remind them that they don't have to pay, $53,000 or whatever it is today. They can just buy $10 and get a number of sats. I think it's something that I need to start doing a better job at. Anyhow, let me just think about that piece. And then also moving into from the bear market to the bull market, I want to talk about the things that are happening behind the scenes and all the different progress that different accounts have made, different products have made. And I always use this example because I feel that in the beginning, a lot of the crypto market was it's just hype and speculation. And I give a prime example of helium and alluvium. And both of those projects, now they have like a working product. I just find it very odd. But alluvium, I just wanted to showcase this, that, it was over $1,800 on 2021. And of course, we have so much as far as tokenomics and how much was actually gets released. So yes, there was less there, but look, it went from almost 2,000 down to just over $100 for the token. And it didn't have anything at all back then. So I just wanted to highlight and say that from having nothing, and this is from Jesus Martinez. If you don't follow him and you're into Web3 and gaming, he's one of the best out there. He really knows what's happening. This isn't just some trailer. This is actual gameplay footage from the game that you can play right now, and they have 4 different types of games out there that, in my personal humble opinion, not being a big gamer, looks fantastic. And it looks like something that people would want to play. And then there's, this piece, and then there's stuff like this. I mean, these are the types of things that, like, when I look at games and people say one of the biggest knocks on Web3 games is they suck and they aren't playable and they're awful. I'm hearing the exact opposite now, that these Web3 games actually come to light and actually doing things. So I like what I see. I think Web3 is going to be a great narrative. I could be wrong, but let me know what you think in the comments. And then to finish up, Trueflation. There was, and we just talked about this a couple of days ago, February 13th, day before Valentine's Day. CPI numbers came out, and there's just been some wonky things that have been, as far as like the numbers go. And some of these things just don't make sense. So what I did was I had Stefan Rust. He is the founder of Trueflation. Because I'm like, you guys are way off. Well, you guys are way off from the government numbers. I should say it like that. Your inflation rate is 1.42%, and we're looking at CPI numbers of over 2, and it's, it's coming down, but not as much. So I just wanted to bring him on, and then just I did a quick interview. It's about 9 minutes or so. So just take a listen to this, and just to tell me what you kind of think about this, because to me, when I think about what's happening with the actual numbers, some things just don't make sense. And I think it really comes down to, presidential elections and fudging the numbers. But man, I hope I'm wrong. So just take a listen to this. Let me pull this up the right way so you can hear it. So again, what I want to do is bring somebody in who could really shed some light about what's going on, because these numbers, they seem kind of funny, and I don't really get it. So Stefan, thanks for coming back again to enlighten us about what's really going on.
No, thank you. Thank you for having me back. Excited to be back, and always good talking to you, Rob. I really enjoy it. And I think you're doing a great show, educating. And the more we educate people, the better everybody's armed and researched to know how to handle with whatever situation's put in front of us.
Well, what's great about that is what we get research is we have to get, accurate data, first of all. So just to give everybody a little recap, we had the headline CPI and core CPI come out, and it's a bit above of what was estimated from, the powers that be and the economists. And they said we'd be at 2.9, now we're 3.1. Thought they're going to be at 3.7, 3.9. So great. And what happened, of course, this was 2 days ago. Today it's the 15th of February, and we can see that there was a little bit of a drop. No big deal. S&P 500, they also took a drop, recovered quite nicely. Bitcoin price, just taking a look at it. Yes, it did do a dip, but hey, looking pretty good. And then overall market itself, we're over 2 trillion, so I'm feeling pretty good about that. But Stefan, the thing about all this stuff is that, we see these numbers come out from the government, and we believe them to be true. Well, not all of us, but then I take a look at the dashboard here at Trueflation, and it's saying something totally different. So run this down, how this is working and what the real numbers are.
Yeah, no, we think our numbers are the real numbers, and I'm biased, right? So take that with a grain of salt. But why do we think we're accurate? We track 18 million items. We have 3 price feeds per item. And you can see we have it in 12 categories versus the 6 categories versus the 80,000 items that the government tracks. Sure. And so we just have way more data. We pull it in a real-time basis. So we pull through using APIs, taking a developer approach to actually acquiring all of this data and then making it updated every single day, getting it updated for everybody. And that seems to give us a number that people seem to believe is more an accurate reflection of what they're experiencing when they go to the gas tank or the gas station or to the grocery store or wherever they may be going and paying for items. Yeah. Now, you have up above, by the way, if you go for an aggregated view in the top drop down, you can go to aggregated view. And then what we do there is highlight a 3-year perspective in terms of over the last 3 years, what and how will you have, or in this case, 1 year, lost money, right? And so since the beginning, you've lost 22% in purchasing power. So that's a quarter of your income that's basically just out the window. That's why the pain is so big. People are really experiencing pain. And when Yellen goes and says, "Oh, we're better off than pre-COVID, pre-pandemic," I don't know. I don't think the prices are going to come down than what they were before.
Yeah, I can see it. And especially as we take a look at this aggregate. I do like this piece because people will say, well, it's coming down. Well, it's not really coming down. It's coming down from like these enormous highs that we had before. I mean, 24%. I mean, like you said, a quarter. Exactly. And then coming up. And then now we're seem to be doing a reversal. So break this down real quick. If we're taking a look here as like, what are the different numbers that just didn't add up when you took a look at the data that came out of the government itself? Was there something that really struck out at you like, wait, that doesn't make any sense?
So we tried. The government did a couple of things this month. They changed the methodology on how they're calculating. We're still trying to understand what the exact changes were and how they changed it. Their argument is the weightings have changed, the way people are spending. That has changed, and so that's justification in terms of how they reallocate and change their weightings. That may be true. But what we found, that really complex and confusing was the fact that gasoline prices for the month of January are down over 10% compared to the same period last year, right? So they're down over 10%. So if you go to transportation and you look at the gasoline number, which is the light blue number there in transportation, you hit the light blue number, And by the way, transportation, and you can go there to the last dip there at the end. There. That is now that is between December and January, end of January, January 30th. So you can see that's a 10% decline in something that is about a 20% household expenditure goes towards transportation. So people are spending money on transportation. Now the cost of transport, filling up the car with gas has dropped 10%. That has to have a significant impact overall on inflation. The same is happening with owned dwellings. Owned dwellings have come down in pricing. So housing, you look at the owned dwellings. Why has that come down? Because a lot of people haven't renewed their mortgage from when they originally had them out. 30-year-old mortgages. Why would I renew it in a time where interest rates are higher? So nobody's renewing their mortgages. And ultimately, over the last course of 3 years, I've paid down a lot of that outstanding amount. So my interest and the amortization associated with my outstandings have come down as well. And so again, housing is some 23% of overall household spend. And so you add those two up, not to mention maybe food category, clothing category, they've all seen a big decline. So all of those combined should see actually a significant drop in actual inflation number for the month. Instead, the government seems to have some other number, which is a bit funny and weird to take into account.
Do you think, just by explaining that, do you think that as we get closer to Super Tuesday, because here in the States, we're going to go through another presidential election, do you think as we get closer to that election, those numbers that you're talking about will actually dramatically start to shift? And you might see a lot of different things go, oh, no, this is what it really is. And now we're doing a great job. Look how great the economy is doing. Do you think that they can go in that direction or they can go in the opposite direction?
So, of course, that's a conspiracy theory. How dare you think like that?
Well, I'm just saying, because the government it hasn't a great track record with us. We'll just say that.
Yeah, I mean, I hate to think it, but I do feel, I hate to say it, but I do think that actually, that is definitely a high potential that's likely to happen. There's a lot of money locked into money market funds. A tiny change in interest rates will unlock that liquidity. Where will that liquidity go? It'll go into the stock market. It will go into alternative asset classes. And that's going to then help create a lot of wealth amongst people, the middle class. And guess who's the biggest, winner of middle class wealth growth? It's going to be the Democratic Party. That's their constituent, right?
Well, that, and of course, the people that are at the top, because the people at the top,
them too.
they have the Castillon effect, where essentially the money flows into the top and then gets to us at some point. So
yeah, and so I think they by keeping the inflation numbers slightly higher, they are justifying how to push out the decrease in interest rates. And so as a result, they can then sort of make sure that hopefully it comes back, and then ultimately drop interest rates at some point in time to fix the economy around the summertime. So maybe in June, they'll drop the interest rates, and then the markets will start picking up when everybody comes back from the holiday. Boom, November here. What do I go and vote on? I'm going to vote on the people that are keeping a good economy. And Bidenomics is doing really well, right? It's really good for the economy. And
that leads me to some of my last points, which would be this. Just by you saying that, we take a look at the FOMC, the target rate probabilities for the next meeting. Before these numbers came out, we were looking at around a 40-60 split. Now we're looking at 90%. People say, no. The target rate is 525 to 550 bips. And we're going to stay there about 90%. You got still some people like, no, they're going to cut. They're not going to cut. And then the 1st of May, what do we got? 60, 62, 34. And then even so, but I don't think it's going to happen. So like you just said, well, if they don't do it there, maybe they could push it out to here.
To June, and then June, you can then see it's sort of slowly.
But they've got time, and then 18th September. So as these numbers start to be jumbled, they can do essentially whatever they want to, and get away with the things that they want to do. Unbelievable.
I mean, it's really, that's why we set out Trueflation in the first place, is really to the one scorecard that really matters and tracks the performance of an economy. And how do we make sure that that's independent? It is immutable. It is transparent. Our methodology, everybody's downloading our methodology. Go download it. Check us out. Hold us to scrutiny, right? Hold us accountable. Anybody can see how we calculate it versus it being hidden behind smoked rooms, in smoked rooms, behind closed doors, where they then decide on the day after they've announced the inflation updates, they then go and share their methodology in some murky sort of intransparent way that you have to decipher and figure out. And this has been going on for nearly hundreds of years, right? This methodology is over 100 years. This process is really deeply ingrained into the system. And we need to, and what are we all doing in the blockchain? Why are we all so excited about digital assets? Why are we so excited about the blockchain? It's because it's bringing about a systemic change. And that systemic change is opening up markets that are going to allow for limitless participation. And I think that's the exciting element. And how do we do that with real world asset metrics and score metrics that score the performance of our everyday lives?
Yeah, well, that would lead me to the final thing, because what I like about the site, first of all, it's free. Everybody likes free. But the other thing is that all the data that you guys pull in, I appreciate it, but I know that you guys were using a centralized platform. It wasn't AWS or Google, it was another one. But of course, DigitalOcean. DigitalOcean. So like when you do that, of course, things could go a little bit wonky because, it's a centralized platform, and that's pretty much how it is. And there's a new package coming out, a new essentially legal aspect from the European Commission Digital Services Act package to create a safer digital space by essentially regulating the things that are being put out. And of course, if that happens in, our friends over at the EU, of course, it can happen here. So I'm glad you guys are moving away from essentially the centralized aspect and going to be doing a lot of things with the decentralized aspect. So all these so it looks like to me, like you guys are going to be having your own nodes, verifying the data and pulling this data from over here from the centralized part and having everything run it through a decentralized, multifaceted ledgers. Is that essentially what's going on? Because it seems like almost like a D-pin play.
Yeah, it's so just to be clear, we've always been very decentralized already from the beginning. The only thing that we do is calculate the indexes on a centralized server. So that's where we have infrastructure requirements. And what we want to do is make sure that that index calculator is equally decentralized, as is our data. We partner very closely with Chainlink. Chainlink and the Link Marines have been super supportive of everything we do, and the Chainlink ecosystem, right? So they've taken us onto their platforms, all their node operators. They love the data that we provide, and they host that data for us and support it across I think some eight different blockchains now.
Yeah.
And so, yeah.
Chainlink is becoming like a big layer 0 essentially, and then it's
Yeah.
not just an oracle, and that's why I hold it. So okay, so sorry I misspoke on that one. Decentralized and now even more decentralized. I'll take it.
Yeah, and now we're building on top of that infrastructure that they've built out, and we're running our data, our compute, on the result of our compute on their rails. So that's how we sort of look at it. They have this CCIP. They help us distribute the final indexes onto all the various different blockchains and broadcast the final indexes on those blockchains. Not only the indices, also the pricing data and the different categories that we have across all of those different chains, which has been really brilliant. But our goal is to set up a Trueflation stream network that allows not only the qualification and verification of all real-world asset pricing data, but also allows for the compute of indexes and enabling data analysts or any participant to go and create their own index with the verified data that's out there and monetize that by distributing that to decentralized exchanges, to liquidity pools, to synthetic assets that are going to be built using these data feeds.
Man, exciting times. Okay. Well, Stefan, you said a lot in a little bit of time as usual. I appreciate you coming on and schooling us about what's happening. Again, everybody, if you're looking for just to dig the data, I'll link Trueflation's website in the links in the description below. But Stefan, thanks again for stopping by. And of course, we'll have you on as things get updated.
Yeah, no, thank you. And
yeah, so thanks, Stefan. It's always good. It's always good when Stefan comes on because I like to break down that information, especially with the CPI numbers. I just don't trust it. It just seems like it's a game, and they're moving around data points. And then of course, when we have our elections coming up in November, it just seems like all of a sudden I think things are going to just turn around miraculously. But I could be wrong. Also, I wanted to make mention of there's this tool from trueflation.com/calculator. It talks about, excuse me, what's your personal inflation. You can put your numbers in. You can actually see how much your purchasing power is actually decreasing. So I'll link that in the description as well. But that is it for today, everybody. So first of all, thanks for stopping by. I appreciate it. Like today's video, give it a thumbs up. Consider subscribing. Everything we talk about is time sensitive.